No change in non-farm payrolls. Zero, Betty. No change in non-farm payrolls. Unemployment holds steady at 9.1%. 45,000 Verizon workers on strike during the period, so you could add 45,000. That strike is over, but it is still a very grim number, and the revisions make it even worse. We lost 58,000 more jobs in June and July than we thought. Most of those jobs, however, did come from the government sector, not from the private sector. The number of unemployed held steady, basically at 14 million. Here are the sectors: healthcare up 30,000, mining up 6,000, temporary hiring up 5,000. But we had losses in the government sector, 17,000 jobs lost, despite the addition again of those 22,000 Minnesota state workers who were back on the job. Information down 48,000 again, most of those the Verizon workers. Retail down roughly 7,000. Manufacturing down 5,000. Average hourly earnings were expected to go up 0.2%. They were down month over month 0.1. Year over year, the change there 1.9%. The work week down from to 34.2 from 34.3. You have to go all the way back to February of 1945 for us to have a non-farm payroll number that came up as zero, Betty. So we didn't get a loss of jobs, but we didn't see a gain. And again, you got to factor in those Verizon workers, but you also have to factor in the revisions. This is not a good number.
That has been a problem in this jobs market, is there's no or very little hiring going on right now. Dominic, I see the equity futures are pretty much near their session lows right now.
Well, they were, Betty, near their session lows going into the number. That zero print actually put them even worse off. The S&P futures dropped a quick 8 points on that news of zero job growth in the United States. If you look at an intraday chart, they're all pretty much going to look the same here. That chart shows that steep drop off at the right-hand side of your screen. If you look at the rest of the stock futures, Dow futures, NASDAQ futures, again, same kind of pattern. All of those indices moving towards their lows of the session here. Also looking at what's happening with European stocks, because our global markets are intertwined. The UKX, which is the FTSE 100, the DAX, the CAC in France, all of those European stock indices on their session lows as well in response to this U.S. jobs number. We'll keep an eye on those futures, but again, it looks like, at least for now, Betty, some of those key levels on the downside that we were talking about just a few moments ago have been breached. We'll see how the market reacts as we head towards the opening bell.
Okay, all right. Dom, thank you. Let me just get to Mike, because I know, Mike, you're looking through the numbers a bit more and what they're saying about hiring and what they're saying about the jobs market. Mike?
Well, Peter ran through the categories. A couple things stand out in the overall numbers. One is that the average hourly earnings figure falls a tenth. People spend out of what they make. The fact that people are making less is not good news, even if a lot of that is probably attributable to the Verizon strike. It is something that will resonate with Americans. The other is that average weekly hours declines by a tenth. Normally, companies, before they start cutting workers, start cutting hours. So if they are going to cut back, this is a bad portent going forward. So overall, Betty, not a good report at all. The one thing we can say is more people went into the labor force. So it's a little bit of a surprise that perhaps the unemployment rate stayed where it was.